Growing up, I loved watching films, but the criminal, or the bad guy, were always depicted as someone quite dirty, maybe doesn't have a lot of money, or didn't seem like the kind of person you wanted to be friends with. But today's criminals, or bad guys, have become more sophisticated and have infiltrated many corporate industries. Long gone are the days of robbing someone on the street. Now they are working in industries where stealing a huge amount of money is only a few clicks on the button of their computer, or simply having a conversation with an insider to get the information they need to conduct their crime. In today's video, we will be taking a look at what is white-collar crime, methods used by criminals of white-collar crime, and what impacts it has across different industries. Hello, and welcome to another KYC Lookup video, where we bring you AML related content to help you enhance your knowledge in the fight against money laundering. Before diving into today's video, be sure to subscribe so you don't miss out on any future videos. Oh, and don't forget to leave us a comment with any suggested topics you would like us to cover in the future. We also have a special announcement to make, so be sure to watch until the end to find out what it is. So, on to today's video. What is white-collar crime? In definition, the term white-collar crime refers to financially motivated, non-violent or non-directly violent crime committed by individuals, businesses and government professionals. These crimes are categorised by deceit, concealment or violation of trust to obtain or avoid losing money, property, services or to secure a personal or business advantage. Some may say these are victimless crimes, as a corporation more often than not is the target. However, a single scam can destroy a company, devastate families as their life savings have been wiped out, or cost investors billions of dollars. What types of white-collar crime are there? There are many types of white-collar crime, but the most common are corporate fraud, embezzlement, Ponzi schemes, extortion, and bankruptcy fraud. Let's take a look at each one more closely. Corporate fraud. According to the FBI, the majority of the cases of corporate fraud they pursue involved falsification of financial information, insider trading, and schemes designed to conceal corporate fraud activities and impede the regulating bodies such as the Securities and Exchange Commission from conducting their inquiries. Embezzlement. Embezzlement happens when a person entrusted by an employer or another person to handle money or property uses their position to misappropriate funds. An example of embezzlement is when an employee finds ways to funnel company money into their own bank account. Another is when a politician spends campaign funds for their personal expenses. Ponzi schemes. Named after Charles Ponzi, a conman in the 1920s. A Ponzi scheme is a type of investment scam that promises high returns for little to no risk. People or organisations engaged in Ponzi schemes focus their efforts on attracting new investors to pay the older ones. The scheme falls apart when new customers stop coming in and the flow of new investments dries out. If you want to find out more about Charles Ponzi and his schemes, then please check out our video of the top 5 con artists in history. Extortion. Extortion occurs when a person coerces an institution or another person into giving up property, money or services. An example is when gangs force store owners to pay protection money. Another is when a blackmail victim pays money to keep someone from publicly divulging information that could potentially harm their reputation. Bankruptcy fraud. A person burdened with insurmountable debt can find relief by filing for bankruptcy. This relief, however, comes at the expense of creditors who can only receive a portion of the debtor's non-essential assets, or assets not necessarily to maintain a household or a job. So, if a filer intentionally hides property when filing out bankruptcy paperwork, they can be accused of bankruptcy fraud. Now let's take a look at a very well-known case. Bernie Madoff was a very well-known American financier who was found guilty of conducting one of the biggest Ponzi schemes in recent history. Madoff defrauded thousands of investors out of tens of billions of dollars over the course of 17 years. He had a very successful career as a trader and was the chair of the Nasdaq in the early 1990s. This he used at his advantage and created a front of respectability, which gave his investors confidence to then invest in him. Madoff would take the client's money, which he said he was investing, but funneled it into one single account that he would then use to pay another client. However, when the markets dipped in 2008, he was unable to keep up the system he had created and confessed to his sons the scheme he had been running. His sons were unaware of their father's dealings and ultimately reported him to the authorities the day after his confession. In 2009, at the age of 71, Madoff pleaded guilty to 11 federal felony counts, which included security fraud, mail fraud, perjury, and money laundering. He was sentenced to 150 years in prison. He only got to serve 12 years, as in 2021, Madoff died in prison. What impacts does white-collar crime have across different industries? White-collar crimes are more severe than any ordinary crime because in these cases, financial losses are much higher and the damage is to public morale. It is also known as socio-economic crimes because it impacts adversely directly on society. Trust can also be lost, which has a big impact on us all, as we are putting our money into the hands of companies who are entrusted to take care of it. It can also expose corporations to have big loopholes that can be manipulated, and so they have to work hard to tighten their procedures and implement new ones. As you can see, even though white-collar crime is non-violent, it still has a devastating effect on all those involved. Well, there you have it. What is white-collar crime, methods used by criminals of white-collar crime, and what impacts it has across different industries. Please tell us in the comments section what other white-collar crime methods criminals use and other ways it can affect an industry. Now for the special announcement mentioned at the start of the video. We are now launching our very own courses for you to take a more in-depth look at a variety of subjects, such as Introduction to AML, Beneficial Ownership, and Customer Risk Rating, for example. So make sure you visit our website for further details, and let us help you connect the dots in KYC. Thank you for watching the video, and if you made it this far, don't forget to like and subscribe to watch more amazing videos.